something impossible is happening, and almost nobody is talking about it. By every traditional market rule, Bitcoin should be falling. The Fed remains hawkish, oil prices are elevated, and Washington's biggest crypto bill is losing momentum. Yet Bitcoin and Ethereum are doing the exact opposite. Tom Lee says that's because the market is already pricing in something far bigger than most investors realize. So why is Bitcoin refusing to break? Tom Lee believes the market already knows something that most investors don't. In fact, he says we're witnessing a financial turning point unlike anything since 1934. And if he's right, 2027 could become the biggest year in history for both stocks and crypto. The question is, what does the market already see that everyone else is missing? Let's connect the dots.
Well, the price of crypto is not following what people expect because they're saying, hey, the Fed could be hawkish, so crypto should be down. Oil prices are high, crypto should be down. And of course, AI's trade is still healthy, but crypto is actually rising. ISO of Ethereum to Bitcoin has been going up, even though the Clarity Act looks like it's really being stalled. You know, the odds of passage this year have dropped to in the 30% range.
Can I one more time ask why the Clarity Act needs to be passed? What does it do?
Yeah, the Clarity Act creates a national body to govern crypto in the U.S. So a singular entity, which will be the CFTC. It's a big deal because if you're, as you know, the big banks and the asset managers are tokenizing assets and want to build stablecoin rails. If they have to be subject to state regulations or local regulators, it is going to give a lot of people cold feet.
But are they for it or they're against it?
It's many of the asset managers are for it. Charles Schwab, Franklin Digital,
because
Fidelity.
This is forgive me if I don't have my years exactly right. I believe the SEC was created in 1934, I think, ish. This is a 1934 type moment, and the reason the SEC was created is because state regulators, you might have one rule in Indiana and another rule in Virginia, and investors like, I can't manage both these rules. Bitcoin is having, all crypto is having that 1934
Correct.
Type moment, right?
Exactly. And in addition, crypto is, because it's turning money into software, a lot of things can turn into money. Loyalty points, reputation. Then you want a governing body to oversee all this. Now, Japan, Russia, Europe are actually passing Clarity Act-like bills. So the U.S. is risking getting behind. That's why I think crypto is recovering, because outside the U.S., it's being embraced.
Even though you say you actually think, look, they had, what, a few legislative days left before the midterms. Could this be a lame duck kind of move, do you think?
Well, I believe there's still many people who are hopeful that something can be offered. But it does sound like that a lot of concessions were given, but that those who oppose the bill still want to extract something else. And so anything could happen.
Everyone thinks they know what's driving Bitcoin right now. They're wrong. While the market is obsessed with the Fed and interest rates, something much bigger is quietly unfolding beneath the surface. Tom Lee says the next move in Bitcoin and crypto won't be decided by what everyone is watching, but by what almost nobody sees. Here's why.
Would you take that prediction market bet, so to speak? What do you think? Is there any real chance the Fed hikes rates this week?
I think that, you know, the prediction markets and funds want to hedge on a binary event. That's why you got the 30%, because someone needs to hedge something. But I'd say the probability is low. I mean, I wouldn't expect them to raise rates.
What about at any point in the future?
As you know, they're going to see how the data unfolds. So I don't think it's data dependence, but data responsiveness. To us, I think the underlying inflation story has really weakened because shelter is really weak, and we'll see it tomorrow with Case-Shiller. And if wages aren't pressure, then the real pipeline of underlying inflation that we're seeing now is just tariffs and oil, which aren't things the Fed has to necessarily embark on a hiking cycle for.
Potentially, I don't want to use the bad word of transitory, they're potentially temporary, right?
Yes. And
oil is down right now because there's some talks. And by the way, tomorrow could be up again. We have no idea what's going to happen. Depends on the talks. But the point is, if and when there is lasting sort of peace, oil will likely go back down. The market seems to want to push it back down. that's got to impact the Fed's thinking.
Yeah, because then they just have to see this little bubble that they have to kind of manage through. I mean, I think in some ways they might just shrink the balance sheet instead of doing a policy rate change.
A quantitative tightening?
Correct. Yeah, I think that's a better way to titrate. What they might say is like, hey, let's try to put some pressure on growth, but not to deliberately slow the economy.
Crypto.
It was not a good month for July, and you said that it was, even for what you were expecting, it was not as positive as you were thinking. But the averages didn't do that. There was a day where the Dow went down 1250. Who knows what's going? That was an AI unwind for that hedge fund to explain it. Doesn't matter what caused it. It did get down, 7,200, nowhere near 6.
No.
Or maybe 73. How low did I'm just off the top of my head. Is that enough now?
Well, I think August is a month to recover how June and July have been sort of flat months, but earnings estimates have gone up a lot. So the stock market's kind of a coiled spring. And then we had a huge deleveraging, as you're talking about, because of the AI unwind and Korea's policymakers panicking. So I think the markets could actually rebound strongly this month. Like maybe we get to 7,800.
This month, the 7,800.
Yeah, for the S&P.
Is that forecast for the 10% drawdown still intact?
Yes.
It is?
Yeah, so...
Can't you take that off the table? Will you do it for me? Say it doesn't have to. No, I'm kidding. So we get to 7,800, maybe a 10% drawdown, and then close the year above 8,000.
Yes. Yeah, I think because as we start to look at 2027, there's a lot of the clouds that are heading this year kind of lift. The SpaceX unlock will be behind us, and the market testing of the new Fed will be behind us. So I think, and then of course there's already been a leverage unwind. So I think 2027 could be one of the best years for the stock market.
And you think part of the positive sentiment this month is going to be cooler inflation data? Why?
Yes.
Why? Oil's back up.
Yeah, oil's up, and we still have the tariffs working through, so those are hitting the CPI numbers, but the real driver of inflation historically has been housing and wages, and housing has really disinflated. We've had 3 months now of declining home prices. So you're taking out one of the biggest weights for inflation. And then I think wage inflation is really muted. I mean, we'll find out this Friday.
Hey, Tom, I just want to ask you what you think of the Leopold Aschenbrenner situation and the idea that he was highly leveraged 4 times, had to unwind this stuff. How much of that played into what you were just talking about with South Korea and the panic that happened there? How much of that was because he was selling that portfolio at the same time?
I think it was a big factor because, as you know, Korea is basically two companies, Samsung and Hynix, so it's memory and semis. He, of course, had a very large following. So not only was his leverage on his $45 billion, let's say it was levered to $150 billion, but there was a lot of money piggybacking on his trade. So I think in some ways, the unwind, and even last week, was due to a lot of funds being aware that he might have been in trouble.